Yeah, okay, so let's get right into it. Holy smokes, right into the fundies. Well, typically I introduce myself first. So, hello, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Traders Way is an ECN, allows you to trade Forex, but also energies and metals, right? Stock indices, binary options. Lovely tout le monde. And I've been trading currencies for, publicly over a decade now. This is, I think, 400 hours of webinars on fxstreet.com. So thank you to FX Street for hosting us once again. I have a simple goal for doing these meetings every Friday. I want to contribute 1,000 pips towards your Forex trading success. And that's why I'm here to share. So there's a bit of a challenge that I'm kind of offering you. I'm going to share a lot of advice, and some of it's just going to be technical and fundamental, just give you sort of my perspective and my outlook and, what I've gathered over the years. But sometimes I give you advice on things that you need to do, ways that you need to grow. And I think maybe 1 out of 100 people do it, maybe 2, and those are the ones I think that are going to succeed. Not because my advice is so brilliant, but because those are the people that will do whatever it takes to succeed. And I would bet on them any day of the week. The audaciousness of their sickening work ethic. That's what leads to success ultimately. So that's up to you, okay? All right, so we got a question right off the bat, bada bing, bada boom. FOMC meeting minutes. How many people here have read the actual meeting minutes? And I don't mean in the newspaper. I mean you downloaded the meeting minutes from the Fed website and you read them. Cool. Look at this. Almost everybody that said yes is part of my crew. All right, so the other 60 people in the room that didn't read them, let me ask you this. Do you think a professional Forex fund manager managing, hundreds of millions of dollars, do you think they read the meeting minutes? Would you kind of just sort of expect that? Okay. So if you're trying to improve and get to like a professional level as a trader, you need to mark that down and say, you know what, I'm already missing the boat. Okay. So like 8 years ago, I wrote a book. It was the best-selling Forex book for about 2 or 3 years on Amazon. In that, I talk about how I became an improved trader. Okay? And one of the things I did, because back then there were really very few, if any, gurus. Right? It was a very new thing. So I didn't have someone to mentor me. I never had someone to teach me. I'm completely self-taught. And so one of the things I did is I wrote down a list of all the characteristics that I thought a successful professional Forex trader would have. For example, patience and discipline, but also the types of things that they actually do, okay? But I just started and I created this big, long list. And then I decided I'm going to fake it. I'm just going to do those things on the list. And some of the things I really even didn't know how to do, so I had to kind of dive in and teach myself. But generally speaking, I just tried to fake it. I just tried to do those things that were on my list that a perfect professional Forex trader would be doing. And the only goal was I would keep faking it until I forgot I was faking it. And my goal is like maybe in a couple of years I would just realize, oh man, I totally forgot about that. There's my list. And those are the things I do all the time. I totally forgot about that. I was faking it, and now I'm just doing it. And even, wow, how cool, you know? Fake it till you make it, baby. So one of those things that you should do, even if you don't understand what it says, it's not going to hurt. But if you simply downloaded the meeting minutes and read them, it probably won't make you a better trader on day one. But you now have sort of positive trading habits that you know successful traders have versus just being stuck in the, doldrums of retail Forex trading, right? So, for example, how many people here read the meeting minutes from the Reserve Bank of Australia? That was also this week. Very good. Quite a few of the same people, right? Now, quite a few of the same people are saying yes, 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 yes. Well, that's because, if they don't do it, I hit them over the head with a club. Because we meet and we do strategy sessions every day. You can find my videos on youtube.com/c/tradersway, but they're Traders Way clients. We meet every day. And I'll ridicule them, humiliate them, beat them down like dirty dogs because I love them. And I want them to succeed. So I'm kind of doing the same thing, guys. So it's a great question right off the bat. Hey, let's talk about the Fed meeting minutes. And then boom. So it's a good question. But I need to just go through that. So will this add that 1,000 pips? Remember, my goal for doing this, are you paying me money? No. Is FX Street paying me money? No. My personal goal for doing these webinars, spending 50 hours with you this year, is I want to contribute 1,000 pips to your success. I want you to absolutely feel and believe that the time we've spent together was worth something. Okay? And maybe this doesn't specifically lead to pips in your pocket, but it will lead to your success, and I know it won't hurt you. So put that down on the list. When a major central bank releases meeting minutes, just read it. Right? And how many hours are spent with men, usually, reading the sports page or watching ESPN highlights from yesterday's, games, Sports Center, right? If they only paid attention to their finances with the same zeal, right? But that's really, you need to be a fanatic in Forex. You need to be a fanatic, like a huge fanatic. And you're like, meeting minutes from a central bank? I got to download that. I am going to read that like there's no tomorrow. Right? You're eating breakfast in the morning. Your spouse comes down. Hey, honey, what are you doing? Oh, I got up early. I need to read these meeting minutes. I'm just chowing down, sucking down some coffee and fattening my brain with knowledge. So anyways, none of this is going to hurt you, but I bet you it's going to help you some way someday, and you won't regret it. And, of course, things you don't understand. So they're talking about, the change in velocity of money supply, you're like, what is that? Well, circle it, highlight it, Google it. Okay? All right, so meeting minutes. Let's get to it, yo. Meeting minutes. Some people honestly believed the Fed was going to raise interest rates in September. And there were people on CNBC and Bloomberg that said absolutely 100% chance the Fed was going to raise interest rates in September. This is what the market thought, or at least this was what the media spun anyways. And there's enough, including people who just believe that. That's good enough for them. If CNBC says they're going to raise interest rates, that's good enough for them. So anyways, a lot of people were front-running the inevitable, Fed interest rate hike coming in September. That was their hypotheses. That was their strategy. And what is the expected effect in the currency market when the Fed does raise interest rates? What's the that's the cause, what's the effect if that happens? Stronger USD, because that raises interest rates, changes the interest rate differential amongst the other currencies. And it's also the Fed saying to the world that the U.S. economy is quite normal. The housing market is good. The employment is at normal, healthy levels. And there's no reason to be at crisis mode anymore. And that's sort of an A report card, right? A straight A report card. And all of that leads to things like, investment by foreign companies, right? Direct investment. It leads to, people wanting to buy the stock market because of the potential future profits, so on and so forth, of various companies, because this economy is doing well relative to others. So the dollar can get strong, and that's what people are betting on. Okay, that's half the equation. If they're buying dollar, they have to sell something else relative, right, in Forex, right? So what would you do? The perfect currency is one that's already weak and potentially going to get weaker, and then you take one that's strong, like the dollar, and could possibly get stronger. That's the perfect storm. So what currency are they going to fund this trade with? This dollar long trade? Euro. Okay? Remember, the euro USD specifically accounts for almost half of all foreign exchange trades total. It's almost half the market when you look at the numbers. If it's not half, it's like 1/3. I mean, it's giant compared to everything else. Okay? And I can prove it to you if you don't mind. Not that statistic, but through another way. But anyway, so it was a giant Euro USD short. So anyways, the FOMC meeting minutes come out, and guess what? It didn't look like they were so hot to go on raising interest rates. They didn't really seriously discuss it. And the 100% chance of the September rate hike diminished greatly. So what about those guys that were betting on the September rate hike? What do you think they did when they realized it's not 100%? In fact, it might not actually happen in September. Well, they have to exit, because that was their strategy. Once they realized they had the wrong strategy, right? It was the right trade, Euro USD short, but their timing was wrong. So what they do is they have to offset their Euro USD short. Dollar temporarily gets weak, and Euro temporarily gets strong. Okay? And you get this little change in direction. And this big news here is the news being released. Let me get my drawing tool. Doesn't it always mess up these webinars? Oh, well. Okay. So anyways, so you get the big spike, right? What do? Roll reversals, so, right? Comes down, up. What do? Roll reversal, up, right? What do? Roll reversal, up. What do? Roll reversal, up. That's one I did yesterday, right? So anyway, so it's been going up for a while. But I believe at some point it should go back down. And that this is still part of sort of summer consolidation. So I wouldn't be shocked if we kind of go up to here and then head back down. Okay. No biggie. Now, the other point I wanted to make is some people said yen and not euro. If I go to euro yen, if yen was true, then euro yen would have fallen. Okay. Okay, this is Wednesday release of the FOMC meeting minutes. Euro yen went up. Therefore, if lots of traders were short euro USD and long USD yen, if there was more people in the USD yen trade, then euro yen would have come down because more money would have went back into euro, or sorry, boy, I'm screwing this up. More money would have gone back to the yen and brought the euro yen down relatively, right? But more money went back to the euro, and the euro versus the yen skyrocketed, so the euro was much stronger than the yen because there was a lot more money short euro, long dollar, than short yen, long dollar. You get it? But like significantly more, wouldn't you say? I mean, we know a lot of people were short Japanese yen. There's no doubt about that. I'm not saying that. But isn't it like radically more people? I mean, the euro yen just skyrocketed. So therefore, there was a lot more people short euro dollar. Okay? So that's that. Look at these lovely trades. Just lovely, man. Just lovely till your mum. Do 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 do. All right. So that's that, yo. Okay, so now how many people have reviewed their long-term charts, either technically or fundamentally, printed them out, got a stinky felt tip pen, and wrote your bias for each currency, right? And then paste them or tape them or pin them to your wall. Thank you very much. I appreciate the effort that you put into your success. Now, Alexander did a lot of pips. All right, so let's do our pip and tell. How many people, and I mean specifically from us working together, have made some pips lately, and like, how many? What if it was wrong? Well, at least then you know you're wrong, right, Wyatt? See, a lot of people just don't know what's going on. They're swinging both ways like a broken gate because they don't have a solid bias. But is anyone? Oh, Igor. What, Igor, you're having a... Yeah, no one wants Igor to shut up. I don't know what's going on. I missed that, Igor. It's been good. 500 pips this week. Very, very good. 160 pips since yesterday. Very good, Kenneth. Kelly, 10 pips a day? Well, it's a start, right? Ronnie, 100 pips on Wednesday. Very good. Mohammed, almost 2,000. Oh, Mark's down at around 700 this week. Very, very nice. A break-even week is fine because a break-even week you just you didn't catch it. But when you're wrong, you don't want to lose a ton of money, right? 700 this week, very good. Bitcoin 300 pips, 350 yesterday, very nice. Very good, guys. Congratulations, that's really nice. It's a hard gig. 223. Yeah, well, it's a start, right? Yeah, this is a hard gig, and the pips come and the pips go. Remember that if the market's not moving, you're not supposed to make a lot of money. Just always remember that. And that this is the worst time of year to make money. Because traditionally, the middle of July to the middle of August is the sort of the low volume and volatility period of Forex trading. So if you didn't make a ton of pips, don't worry about it. It's just right? Just that's how it goes. And in fact, if you made a lot of pips this week and the market didn't move, an investor would be very concerned. Okay. But I'll tell you what, though, it's been a pretty good summer. And statistically speaking, Forex traders, the professional Forex traders in the United States, have been kicking butt relative to every other hedge fund strategy. Rick wants to know the least amount of indicators, and you don't need any indicators. Yeah, Turkish says compared to last year. Well, last year was the lowest volume and volatility in the history of Forex. No joke. Okay. So, oh, well, my chart's full of them. Yeah, well, it's funny because, I don't even see most of what you see. Um, all right, so that's my typical setup here. That's a clean chart for me. I call it a scan, right? So I have a scan chart. See, FX Bootcamp scan. And that one's even without the oscillator, which is fine. And so, I look at this and I'm neutral. Boop, that's it. That's how long it took me to do my analysis. And then what I'm looking at is, we have a crossover here and support at the long-term trend, not making lows, not making highs, and I'm just neutral. And so I'm looking, in 1 millisecond, I look at the angle and separation between the 21 and 55, and it's dead to me, basically. Okay. We've hit the long-term trend, so I don't really know if it's going to go up or down. I really don't. So, I'm neutral. That's how I use those things. But we don't even need that. So I can give you an example, and hopefully it works out. Mm-hmm. Do, 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 do. Do. And this is the hold music. La-di-da-di-da-di-da. I listened to Eye of the Tiger today with my 8-year-old daughter. I said, "Honey, this is your hour of power." I said, most kids just show up to school and it takes them an hour before they can learn anything because they're still half asleep. This is your hour of power. I'm fired up, right? So we listened. I said, music is the key. I said, you need your power song. So she tried to find Eye of the Tiger, I think, by, who is it, Taylor Swift, but she got the Eye of the Tiger from Rocky. It was great. Yeah. All right, so this is some sort of chart. I think you guys prefer candles, right? Boop. And it's just moving along. It's not a very good scenario. It's not a very good trade. And what you could do is teach yourself how to trade with no indicators whatsoever. And the one thing that you do use is price action. So like what we had here is a higher high. So you buy the higher low. Oh, hang on. Let's see. That's not working. Color white, I guess. Okay, so you buy the higher low. Right, it zips up. Higher high. Higher low. Higher high. Right? Oops. Shoot. Come on, drawing tool. Okay, there's the next buy zone. Price comes down. Buys it. Where's the next buy zone? Right there. Buy it. So it comes back down. So this is when you buy it. And then now we're actually neutral. So it's actually a pretty bad time to trade this. What I don't know is what's going on. Like, I don't know. It's a Wednesday, November 26, 2014. So I don't know what's going on here trend-wise or fundamental-wise, so on and so forth. But that's how you would trade it. So we're totally consolidated. What time of day is it? So what I was hoping to teach you is, basically how we can do this, but this isn't moving. So we're going to have to wait for a breakout now. Okay. So we're kind of caught in a scenario like this, I believe. Okay. Each one of those candles is 5 minutes. Yeah, it could be time of day. I don't know what's going on. But, am I worried about my MACD? Am I worried about my oscillators? Am I worried about the moving averages or the ADX? No. So if it breaks out to the downside, I'm going to sell the next rally. If it breaks out on the upside, I'm going to buy the next dip. I will be worried about that giant double top. Wow, is this terrible trading? Thank you, simulator. Oh, look at nothing's happening. I'm sure lots of people would have found an opportunity to lose money on this, though, don't you think? That's a pretty quiet Thursday. Of course, I could buy it at support, sell it at resistance. I'm not likely to do that on a 5-minute chart. Hey, if it was a 4-hour chart, yeah, maybe. Okay, this is looking good. Oh, yeah, come on. Little lower, Bubba. All right. So I think what we're going to do is we're going to try to sell this. Trade it as a breakout. So the way you trade a breakout is it should pull back, and then it should drop. Capiche? So let's let it move a little bit. Okay, clear breakout, which is really good. Okay, so we should be getting ready to place a trade. All right, so I'm not trying to show you perfect entries or anything. I just want to show you price action. It gives us some eye candy to stare at. But just for fun, what should we do? Standard lot size, 20 pips. No, take profit, 20 pips trailing. Okay? So risk-reward ratio and all that, that's not my point. My point is we just want to watch and observe what happens to price action. Okay? We're not using any other indicators. All we're using is visual support and resistance. Okay, guys? It was randomly picked out of 15 years or something of data. Okay, Eric? So I have no idea what happened that day. That's why it's a good simulation. Okay? Well, because I don't know the date or what's going on, like I don't know if there's important news coming up, and that's why the market was so consolidating so much. And I don't know if fundamentally at this day should I be long euro or long dollar. I mean, there's a lot I don't know, but we're not paying attention to any of that. So it's not a great simulation in that situation because if you know the market conditions or the market sentiment, it's going to impact your trading behavior, right? Oh, when was Thanksgiving? Yeah, see, I don't know. Not. Yeah, I mean that's probably Thanksgiving, right? No, it's after Thanksgiving. I don't know. See, I don't know. But again, what we're just trying to watch is, the theory is if this did break out to the downside, that it should stay bearish. Okay. Clearly, someone still wants to buy this to the upside. There's a fib on a higher time frame, probably. We're not going to pay attention to that. We're just trading, right? We're just trading without any indicator. Now, Joseph says it could be a fake out. Well, see, this is where fundamentals and a bias comes in, right? My bias, if I knew what was going on here, would override the pure technicals. So, hang on, if I can pause this. If I knew what was going on and I was a hardcore bull, I would be looking for an entry like this, right? Generally speaking. That would be about a 50%. I might want to go long into 382. I might want to go long into 618. But I'm not even looking at what price this is. I'm not looking at pivot points. I'm not looking at anything. Right? So right now, I'm just trying to pay attention to the price action. If it makes a higher high, then I need to become a bull. That's all it's telling me. That's what price action is, right? So if I wanted to be a bull, I would buy here, probably. That's the 382. But in this case, we're not playing it that way. Do I want to swing both ways like a broken gate? No, not if I want to be consistent. And to be consistent, you need to have control. And so I'm trading it as a bear based on price action and nothing else. Now, if it makes a higher high, let me pause this now. Okay? If we make a higher high now, and I mean higher than this high, I can take the early loss. Because as a bear, because I have a bearish trade plan, right? We consolidated. Then we made a breakout. So it should stay lower, right? This is what I'm going for. And so we should stay lower than this area here. I don't really want it to go all the way up to this. But, we were about, 5 pips profit or something. So I'm really only risking 15 pips, right? So nothing really to freak out about. You know what I mean? So if I am taken out here, it probably isn't bearish, and I've learned something, right? This might just be a terrible trading day. We're back into the middle of the consolidation. That's pretty lame. Oh, okay. So let's pay attention now. And then where's the next one, right? All right. So let me go here. Now I have a tough question to ask myself. Do I play this price action? Or should I be selling at the top here? Okay. Now, Wyatt wants to know more about a higher fractal. I think that's a valid question. So why don't we do this? This is just a 5-minute chart. Do you feel like you're trading without enough information? Yes. And that is actually something that I've taught from day one, that when I start trading, even this is a 5-minute chart. I love the 5-minute chart. But I always start with the higher time frames. I make decisions on the higher time frames first, then I drop down to the smaller fractal like a 5. So why don't we enter in some more information and see if it's helpful? Let me load. It takes a bit to load this data. And I suggest we use like an hour and a 15-minute. Okay, here's a 15-minute. And we'll see if it helps us. And then insert, euro dollar. Okay, euro dollar 1 hour. All right. So now we got some more information. Cool. Same thing, no indicators. Okay? Just adding more time to it. I got the eye of the tiger. You're gonna hear me roar. All right. Let's kill the grid, huh? Adios, grid. All right. Make this a candle. Uh, all right. All right. A little better. All right. Let's play it and see how she works. Okay. Zoomed out a little too much here, but all right. So now you can see why it failed, can't you? We should have been a bull the whole time. My point here is that we still don't need any indicators. Okay, you see what I mean? I think the most important thing here is the price action. And that even if I'm trading a 5-minute chart, the most important thing is the higher time frames. Okay. Well, all right, so there is a lot of congestion in here. So you could still stay bullish, but, right, can you see the way what we trade that I've showed you 100 times over and over again, right? Makes a new higher high, comes down. That's a clear buy zone. What used to be resistance is now support. So on this 15-minute chart, that would be an easy buy. I am concerned about this resistance up in here. So we might have, sort of run our course here, but I don't know. Well, for the sake of eye candy, let's see what happens. What? Play. Oh, I see. Sorry. Oops. All right. Like, why isn't it moving? All right. I had my drawing tool. So somebody might play this double top because not only is it a top here, just above it, there's a lot of resistance. Okay. Terrible day. This is a terrible experience. How many people think that that's news related? Yeah, somebody sold it up there. Oh, all right. Well, forget all of that. Forget about those two losing trades. But, I hope the point gets across that more indicators are not going to help you. If you were going to learn anything first, and hopefully this still gets across even though this turned out really lousy, it's the price action. If you can see here on the hourly chart, we made lower low, higher high, lower low, so many times here that this has been working out in a beautiful pattern for days and days and days. And inside these patterns are these smaller patterns, which are exactly the same patterns, just on different time frames. And buying at support or selling in this case, as you can see, it did sell off this congestion area. Um, Buying at support and selling at resistance is more important than any indicator you could possibly put on your chart. Okay. Ron says it's real stuff. I beg to differ on that one. So again, if important news was coming up, I wouldn't be throwing down a trade, and I probably had an opinion on whether it was going to be good for the dollar or bad for the dollar, so on and so forth. You know what I mean? It's like I'm rarely caught surprised. So it's not real. But it's like going to the driving range is how I've always explained it. Going to the driving range and hitting 32 drives in a row, it can be good practice, but it's not real because that's not you don't get to hit three balls off the tee and play the best one in golf, right? Also, you can go to the driving range and reinforce all your bad behavior and come out just as bad of a golfer. Okay? Excuse me. Well, anyways, let's play it and see what happens. Okay, out on that one. Okay, it's going to bounce soon. So now we're back into this stupid stupido. So now we got to short the high if we're going to do price action. Some people still might want to buy this, but because it's made a lower low here, okay, then I'm going to play it as a bear again. Now, the funny thing is, if I would have had a 30 pip stop instead of a 20, I'd probably still be short and in this trade, right? So maybe it's just terrible, my stop's too close. So we're back to being a bear again, okay? But it's not that I'm changing my bias. In this case, if I'm trading technically, I'm not changing my bias. We shorted a break out of our support. So the trade plan was down, up, down, and that plan simply failed. Then it broke to the upside, and then, so this was just, we're caught in between, and we didn't know the bigger time frame. So anyways, we're just trading the strategy. So just to make sure, let me zoom in a little bit. I want to sell high. A little higher, please. A little higher. All right. So I'm going to try again. If this fails, I'm going to cry and come up with something else to do. You right? You lose 3 in a row, you take the day off, right? All right, let's go. My drawing tool's not on. Now why is it frozen? Oh, there we go. Right, and you see where we're short. Just want to make sure. We're on this time frame. We're short off of this. That's our resistance. Have a mug of drink sleep. Is there such a thing, Anil? Yeah, life is pretty sad if you're giving yourself date rape drugs. So we're probably going to come up to a bounce pretty soon. And just look at all of this congestion. There's something's going to happen in there. Okay? Something's going to definitely happen in there. I'm not, again, we have no pivot points. I'm not even looking at psych levels. Okay, finally a winner. Holy smokes, eh? Finally a winner. Okay, so now I'm going to sell the next rally. So let me pause this. Okay, where's the next resistance? Okay, I'm going to sell. Oh, I'm going to sell here. Okay. You got it? Okay, let's play it. Let me go back. I've got the eye of the tiger, and you're gonna hear me snore. All right, come on, Bubba. There's the bounce. Remember, it's easy. We knew it was going to happen before it happened. Okay, the question is, are they going to sell before my gray zone? And that would be an approximate 382 Fibonacci retracement. Well, what can I do about that? If someone's that aggressive, they can have it. It's not my job to chase. I'm setting up ambushes. I'm ahead of the curve, not behind. Come on, Bubba. Come up a little more so I can sell you. You got it. Come on, baby. A little more. Ah, see, someone sold the 382. Oh, well. We were close. At least you knew what my plan was. Well, no. Don't look at this as news related. Okay. Well, I mean, something set that off. I mean, who knows? London or something. I mean, it could be anything. What's happening, in my opinion, is that this was supposed to be going down the whole time, and that we had these longer term waves. And how do I want to draw this? Guess like this. This consolidation, I think, is what's important here. Okay? And it's going to come back, and I'm going to sell it. So we'll play it, let it follow through. Oh, my mic is too loud? Oh, okay. Sorry. I got a lot going on. Come on, Bubba. Come on up so I can sell you. Yeah, this is me practicing my patience. Well, we got really close there, though, huh? Yeah, Haig is like, it won't come up. Yeah, well, I can't do anything about that, right? So the only thing I can do is adjust my aggressiveness. So what do you guys want me to do Should I be taking these little micro fibs? And that's where you're taking like this top to this bottom fib it. Is that how aggressive? I mean, we can try that if you want, but now we're basically scalping. Okay? I'd rather spot trade this. So this is going to come up. Well, Israel, I've already showed you where I'm going to sell it. Yep. Again, it'd be helpful to know what time of day it was. I don't know what time of day this is. 1:30, but where? Is this New York open now? I don't know. Okay, tell me when to sell it, guys. Okay. If I draw a fib, you're not going to be able to see it because my fibs are black. Are you okay with my sell zone? Okay. And also, let me pause it again. With your mind, you should say whether you would buy it here or sell it, right? Would you buy it here or wait to sell it? And you should make a commitment, like say now, kind of thing, and then see how it works for you. So that's what, about a 382 where we are now? What should I do? Should I do it? How many people think I should sell it now at about the 382 Fibonacci retracement? Don't say no. I'm asking how many people say yes. Look at everybody do it, do it. All right, fine. By the way, we've traded like 7 or 8 hours already together. Thank you. Boy, time goes by fast, doesn't it? Time flies when you're at FX Street. Uh, how you guys feeling now, you aggressive guys? Now, who asked the question about the which indicators? So, in a situation like this, you can ask yourself, what indicator do you feel like you need now? Do you feel like you need a moving average? Do you feel like you need an oscillator? Do you think weekly pivot points are important here? And you don't need too many, right? So, right, stop. All right. So I'm not adding to a losing position. Okay, this was my sell zone. That was someone else's sell zone. I'm going to put one down, and we'll see if this fares any better. It may not, right? But I'm going to add our original trade plan and see how it goes. We're not doing risk reward. This is only price action training. By the way, my entry was bad. How's that for patience, guys? Yeah, that's my point, though, isn't it? Is that the most important thing you need on your chart is support and resistance. Everything else is just a little more eye candy, right? They're just algorithms to help you measure, but price action with support and resistance, there's nothing really more important. Are you guys enjoying this? Trading with no indicators whatsoever, just support and resistance. Yeah, that's how Marina trades. Yeah, Marina had 1,000 pip day earlier this week, wasn't it? Oh, last week and another 1,000 this week. Good job, Marina. Okay, now someone's going to have to make a decision whether they want to turn bullish again. Doesn't look like an incredibly bearish price action at the moment. You can see because it sort of a double and then the high. You see that? That's not ideal. But you notice like how I entered my trade properly, and at this point I'm risking almost nothing, right? And for the ones that were aggressive, break even, right, is a ways off too, right? I mean, so it's much better to be patient and enter at solid resistance, or if you're a bear, or buy at solid support, so on and so forth. You know what I mean? So, we only have a couple of minutes left, so that just gives you an idea of sort of going to the driving range. All these indicators, they're not the key to success. Why did I freeze up? You guys are still here, right? Is it just my MT4 that froze up? Yeah, okay. I don't know what's going on here. Yeah, I guess the strategy tester blew up my MT4. I'll have to restart it. But so now I can't use my charts. What's going on with that? Oh, well. But so long story short, the indicators are not the most important thing. The indicators are not going to tell you what to do. The indicators very rarely predict the future. The only leading indicators that I have are things like pivot points, which is a form of support and resistance based on what happened yesterday or last week or last month, and they do some basic calculations. So in that case, on Monday, I usually know what my target is for the week. But the other side of trading is support and resistance based on price action. And that's also a leading indicator because when I'm trading, I'm usually waiting. I know exactly where I want to buy. I know exactly where I'm going to sell. And I'm waiting for price to do what I need it to do. And again, whether it's support and resistance based on price or support and resistance based on market, I usually know where I'm going to get in and where I'm going to get out well ahead of time. Now, an oscillator I use to represent overbought or oversold conditions for whatever I'm measuring. So I use a stochastics to represent overbought and oversold conditions for price action. And then I'll use MACD to represent overbought and oversold conditions for market forces. Are they required? No. Moving averages. I use 2155 to represent angle and speed. For the market, I use the 5/8 to represent where price is going in the moment. So the difference between momentum and speed. Are they required? No. Bollinger Bands measure volatility. Are they required? No. So what is required? Multiple time frames, support and resistance. If you're a bear, you wait for the market to turn bearish, and then you sell rallies. You got it? If you're a bear fundamentally, and then the market seems to make lower lows and lower highs, then step 3 is sell rallies. If you're a bull, fundamentally, Wait for your charts technically to make higher highs and higher lows. Then buy dips. So like a 5-year-old knows, you buy low and you sell high. You buy low in a rising market. So a lot of people screw this up too. They're buying low and they're like, Wayne told me to buy low. Wayne told me to buy red candles, but not in a falling market. Look, if the market's going up, buy red candles because you're buying low. Okay, so make sure you know what direction the market's going. A lot of people have trouble doing that. Well, that's why I use the 2155. The 21's above the 55. Technically, right? It's bullish. That's all. That's a good way to do it. I don't know why MT4 is still frozen up like this. Usually it tells me that it's frozen. Well, we're down to the last minute anyways. So why don't I say my goodbyes? Thank you guys for logging in every Friday to be here. I really do appreciate your loyalty. Yeah, well, if I kill it via the task manager and all that kind of stuff, I'm out of time anyways. But, you know, I want you guys to succeed. I really do. I want you to succeed. I want you to develop skills and confidence. And then when you're ready, I want you to fund a live account at tradersway.com. I want you to succeed at that. If you want to become a professional trader, I have a few $1 million that I'm giving to Forex traders so that they can develop their career over the next couple of years. So I want to help you in that way. So I'm here, man. Whatever I can do for you. So again, the results of this trading, it was a bad day. All right, so we lost 30 pips. But I think the real lessons here is that if you have multiple time frames that you're identifying support and resistance with, then trading the small time frames is doable, right? And that patience is much more important in most certain circumstances than aggressiveness. It's not a fair test, as we explained. We don't know the market bias. We don't know market conditions. We don't even know what time of day it is. I don't know if there's news on the calendar, all kinds of stuff. But we did find our success rate went up when we used higher time frames in conjunction with lower time frames. So why don't you do that? So and if you want, I'll send you an email for the simulator if you want to buy it. I think it's like $100, but it's awesome and it's addictive. I used to use, what was it called, Forex Tester 2 or something. This is way better. And it's hooked right into your MT4. So anyways, thank you to FX Street. Thank you to you. I hope you find your 1,000 pips. Maybe